Good afternoon, everyone. Welcome to Tax Practice, the weekly update for January 26th, 2024, also known as episode number 90, as we this Friday before tax season kicks off on Monday with the opening of e-filing. Catch me live this year. So far, I'll be in Nevada, May 15th for the Las Vegas, the Nevada Society of Enrolled Agents. Latino Tax Fest is earlier this year. It's just ahead of the IRS forums last week of June. Also catch me in Las Vegas. That's 2 months in a row. California Society of Enrolled Agents. I will be there in June in Arizona, June 11th and 12th, speaking on two different AI topics, including how we're using AI to start to reply to basic memos, do customized letters and things. So it should be a decent conversation. If you're in the area, please stop by. If you're not going to be in the area, maybe you should be. All three programs look to be very good this year. If you're not a subscriber, please consider becoming a subscriber here. $52 a month gets you unlimited content, both on demand and live. And last call for the tax season support program, 45 meetings, Fridays, Tuesdays, Wednesdays. We answer all of your questions related to the tax practice, from basic tax preparation explanations to media planning issues and occasionally tax software problems. Anything we can help with, we want to help. IRS has some interesting upcoming webinars navigating the restart of automated collection notices and penalty relief. Those are all those December and January notices coming out. It's only an hour. It's a free CE, but it's IRS personnel. I think it's worth a listen. I'm going to be tuning in. That's next week, January 30th. Employee Retention Credit Voluntary Disclosure Program. Now, I think they've spoken on this before. I don't know how much you can get away with in one credit, but same thing. These are the IRS personnel talking about it. It's probably worth a listen. I don't know if it'll be on demand or not, so I'll be tuning in, and if there's anything good, we'll let you know what's good there. Now, the IRS took the 1099K webinar from the Nationwide Tax Forums last summer, and they've put that up as an on-demand video. Talks about various issues for taxpayers who receive income that is typically going to be reported to them on a 1099K. There's an emphasis on those who use payment apps, Venmo, PayPal, and online marketplaces, like Amazon, eBay. So the link to watch this is on the resources document. There's a Word document with links in it that we've put in the handout section, and you should consider accessing that for any of these things you'd like to listen to. If you're a subscriber, Rita Ryan is doing Form 8858 reporting for us on the 30th as well. Now, she just reviewed that with me. We may need to take this to 2 hours. If you do any international work at all, or have any clients with partnerships that have some international stuff buried in those footnotes, the IRS very quietly revised the instructions to Form 8858, and it looks more and more like an 8865 or a 5471, right? That massive amount of reporting that they want. So you might want to tune in. It'll be available on demand once we record it. So by all means, you probably want to watch. All right. So some interesting stuff as usual. These next couple of pages, remember the IRS is not updating that COVID operations page. It ran for 3 years. So far, they haven't updated it since mid-December. So I can't tell you the specific number of returns in inventory or the, of course, divergence from week to week. So we'll have to settle for this. I'm considering if we're going to drop this part of the report entirely. What I think is interesting, though, is these are publicly available web pages. They're telling us what they're working on. So I find it interesting that, for example, on the 1040 series, they're working on December returns, or 1040s, and 1040X from last July. So much for their at least 20 weeks, right? That's 30 weeks at this point, depending, anywhere between 26 and 30 weeks. Business returns, they're pretty current. Even the amended ones, they're amending from September on the 1120s. 941s are pretty current with the exception of ERCs, which they are still not processing. Any amended return with an employee retention credit is still on hiatus. We'll talk about that in a little bit. And then on this page, just nothing really urgent here, just other than to give you an idea of where they are with things. Towards the bottom, they say 2848 and 8821 are being processed in 4 business days. I don't know about those of you. I'm not necessarily seeing that. I know the service would like us to believe they are. This is disturbing that letters and notices that you send into them. All right, general correspondence for individuals, October, business, September. But that's still 3, 4, or 5 months that paper is festering there before it's getting worked by somebody. That's very frustrating. I can't imagine what's going to happen between tax season and opening up the notices again. I just don't know where this is going to go. The last update we have for return counts is still from December 9th. It was dated December 16th on their website. Again, this isn't even valid. It's not even usable information anymore. Let's talk about some fun stuff. Federal Trade Commission has an order against Intuit Corporation, makers of TurboTax. They have been enjoined from using the word free in describing TurboTax. All right. The FTC gave them an order to stop doing it. It's actually a 93-page order, which we have thrown into the it's a 93-page order, which is in the handout section if you want it. Question about where are they with electronically filed amended returns. You saw the date. They're back in July on amended returns in general. All right. So the Federal Trade Commission's opinion, the 93 pages, states that Intuit's been doing a deceptive ad campaign that is a sufficiently broad, enduring, and willful to support the need for a cease and desist order. That's pretty tough stuff. The order caps off a process that was started in 2019, and Intuit says they're going to appeal, that they should be able to call things free, apparently, even when they're not. So, courtesy of ProPublica, which we know is a little anti-IRS, they're not the most fair and balanced reporting. But if you look here, their 2019 ad says something is free, guaranteed, no federal, no state, no e-file. 2024, it's still free, which I guess they're not allowed to do. But look what they're saying in the ad, right? About 37% of people actually can do it for free. Limited number of forms and credits. You know, like if you have a W-2, we're going to charge you more, right? You know, because they're just that free. You can put your name on the paper maybe. They're not quite that bad. But so we're going to see how this rolls out this year. All right. That's old news. One last reminder for me about PTINs. If you did not update your PTIN and re-register and pay the $19.75, please do that. You're not supposed to be transmitting returns or signing or preparing without your PTIN being updated. So please take care of that. Everyone in your office, even if you sign all the returns, I sign all the returns here, everybody has a PTIN, even if they don't sign a tax return. Just best practice, you want to do that. We have a search tool. It's not been rolled out to the website yet. Think of it still as being in beta, but you can go to the link and you can search. In this case, I typed in representation, and what came up? A number of different programs from different speakers. This is designed to be an easy way to find upcoming and recorded programs that we have available. There's over 300 right now. We're in the process of laying out the rest of the year. So I think it could be information overload. This will be a great way to find what we're doing, and it will be integrated into the website shortly. But by all means, the beta works. What it tells you is a true class or is something you can find, and it provides you with a link to get to what you're looking for. All right, so you might recall that during COVID, the IRS gave us some certain flexibility. Signing a return, boy, if you could sign it with a crayon during COVID, they pretty much would take it. If you could sign it and email it or fax it, they let it slide. They put it in they issued it wasn't in the IRM, but they issued a notice that said, here are the temporary rules. We had that whole list of paper forms that you couldn't e-file, where they said, yeah, it's okay to get them some other way, to e-sign them or crayon sign them and fax them in. And then, of course, that was extended a couple of times, but it expired last October 31st, 2023. So the IRS liked the ability to do some of these things. So they have now released some official guidance on what we can do here. And some of this is a great step forward, I think, in the service's ability to deal with taxpayers digitally like the rest of the, developed world does with their tax agencies. So certain flexibilities are back. Digital signatures is extended indefinitely for a number of forms until they can figure something else out, right, with a digital signature or logging in. Encrypted email, when working directly with IRS personnel, has been extended until October 31st, 2025. We had a couple of exams where the examiner, they weren't supposed to tell us the password in a separate email. They were supposed to call us, but they would tell you, here's the password. Depending on the agent, it was the name of the taxpayer's tax number, their first name, and part of the number, just different nomenclatures. But basically, here's the password we're going to use, and then they would email you notices and things. It's very, very interesting. So the Internal Revenue Manual at 10.10.1 has said that IRS electronic signature program is updated and includes acceptance of alternatives to handwritten signatures, again, for that same list of forms that we've been having that exception for since COVID started. And if you go to that 10.10.1, you can go Google that, or I gave you the link in the resources page. For an allowable list of options, same thing. It's in the IRM, and you can go and take a look at that. The link is in the resources page. And in addition to this, they released the interim guidance to allow us to use email, encrypted email, to exchange data with IRS personnel who ask for it. And that's how we've been doing appeals cases. That's how we've been doing some of the larger exam cases that are not done in person, is via email. It worked pretty well. You don't get so much of, I don't believe this receipt, right? They're looking at images. So we put a copy of this memo also in the handouts, a link to it in the resources. So the temporary interim guidance falls under the authority in the authority section 10.5.1. That's a John Cougar Mellencamp section, right? The authority section. Procedural changes that expired October 31st of last year. It supersedes the memorandum. So originally, we had a set of rules that came out in 2020. They expired in 2021. 2021, they said, yeah, let's extend this. And they extended it until October 31st, 23. This new guidance supersedes all of that guidance, which is to be expected. Examples of the IRS approved encryption technology include secure email encryption with the encrypt only option. They can use it for both internal and external communications. The guidance recommends using alternatives to email, such as the Taxpayer Digital Communications Secure Messaging Platform, or once they roll it out beyond beta, the document upload tool. I don't think any of us are going to deny these are easier ways to work with the government using an upload tool. Someone was telling me the other day that for the first time when they called and they needed to send in a power of attorney for something, they said, oh, do you have the internet? Yes. Go to this website, upload your document, tell me what the number is. They told them what the number is. Boom, the IRS employee was able to immediately access the document. I think ultimately this is going to speed service, make things more consistent and easier. So good for the government, right? It's about time they joined the 20th century. And I did mean that intentionally, the 20th century, because we had email, faxes, and these things last century. So the guidance, though, is voluntary for the taxpayer and the employee. So I don't know what you would do, though, if you didn't want to use this. What would you say? By the way, we exercise our rights to mail you a box of paper. I don't know that anybody wants to do that. Taxpayers, which I imagine through your power of attorney person, have to agree to receive the email, and employees must authenticate the taxpayer's identity, obtain the consent, use approved encryption, and document all of these actions in the case file. Um, Taxpayers must give written consent for encrypted email. Now, communications. Now, that's interesting because in the couple of times I've done this, I wasn't asked for consent. I mean, maybe a verbal consent, the conversation when something like, hey, I'm going to email this to you. Let me tell you what the password is. Oh, okay. Maybe I come across as the kind of guy that likes email. IRS employees must document encrypted email actions in the case file, following certain guidelines that are provided in the for case file maintenance, right? And that's also in the IRM. So this could be cool if we think, oh, maybe he didn't follow the rules. Let's do a FOIA and get a copy of the case, right? All right. So again, this talks about the memorandum. It introduces the policy. And this policy, though, interestingly, is going to remain in effect until they figure out what they want to be when they grow up, right? We've been talking for a while. I mean, I haven't been an NAEA member in a couple of years. And I remember that in 2018 or 19 at the fly-in day, we were talking to them about allowing digital signatures on power of attorney documents, which we now have. So it's interesting, though, that this time they have not created interim guidance. They have, but they haven't created interim guidance with an expiration. They're saying, you can do this until we figure out what we're going to do. Kind of cool. Helpful. All right. So let's talk about the Tax Relief for American Families and Workers Act of 2024. Now, I have seen a couple of instances at Tax Foundation and one of the other political blogs, Politico, where they're now calling it the Bipartisan Tax Act, formerly known as the Tax Relief for American Families and Workers Act. I can't find if there's another name. I'm still calling it this, but it's the bipartisan tax bill, whatever you'd like to call it, right? That pain in the butt mess they're going to make us. So the tax bill was posted by the House. They could go vote on it. They want to put it under the fast track suspension rules because there's no budget. They want to get this thing done. House Ways and Means advanced it to the full vote with a 40-3 vote, which means both sides of the aisle are in favor of what they've already written. Now, the Freedom Caucus, though, has presenting some challenges. They're not really pleased with this. For those of you that don't know what the Freedom Caucus is, these are the most conservative House Republicans. Did you ever think you were going to need to know this much political science stuff to do friggin' tax returns? All right, so what's going on, though? There are implications for the speaker and the bill. We now have a government where they were willing to depose the speaker, right? Like we're New Zealand or somewhere, right? They had a vote of no confidence and out the guy went. We hadn't done that in 100 years, hadn't done it in a while. So we now have a Congress that was willing to do that. So the speaker has a bunch of considerations, including the impact on the November elections. There are concerns that they don't want to give President Biden a pre-election win. In other words, they don't want him to use the Tax Act to say, hey, look what I gave you right in the nick of time for a vote. Moderate members of the House from high tax states, New York, California, want to seek an increase in the SALT deduction cap. Well, that's been a gimme, right? Almost since the beginning. That's why we have the pass-through entity tax workaround, right? Everybody's been looking either for a workaround or a change to give us the ability to take that deduction again. So now over on the other side of Congress, the Senate's Republicans have these concerns. Remember that if you remember from that video, how a bill becomes a law, if it's passed in the House, it goes over to the Senate. And we're at the point where they're going to vote on it in the House. So the Republican senators are expressing concern about the child tax credit. It's too expensive. We're giving it away. And some other things that I think are a little off the wall we'll talk about. They have a desire to influence and modify the bill from the Republican perspective, which is children can grow up in poverty. I guess it's okay. We do have the business community lobbying as well, but this has been going on again for 2 to 3 years. They're focusing on getting immediate expensing of research and development costs. And they're actually running advertisements in the Washington, D.C. market where senators, congressmen, and their staffers watch television, just so that they can speak to the importance of why this bill should pass and why it should include research and development, immediate expensing. All right, so with tax season approaching, we all should have a really big concern here because we're already starting a little later than normal, right? 10 days or so later, a combination of an early Martin Luther King Jr. week holiday and all of these energy credits that needed to be programmed that, we normally don't start the 29th unless there was an extender bill. Now, what are they doing? They're talking about extenders. So some of the things out here, they want to go from 80% to 100% on bonus depreciation. I think this is one of the most impactful things out there. Bonus depreciation is the default. You must take bonus unless you opt out either completely or by class asset life. So that would mean any return you file with 80%, if they retroactively go back to 100%, that would mean any return you filed was wrong. Are they going to automatically recalculate it? That's going to give us all sorts of errors, notices, etc. Or are we going to need to go amend the returns? That's not very palatable either. Or are they going to delay the start of tax season, or are they going to block any return with depreciation on it? That's most likely. They're going to block returns with depreciation if this passes. There's an urgency, of course, to get this bill passed so we know where we're going due to the tax filing season. Then again, in the past, we now have precedent for extending the filing date, right? So I've read this nowhere. This is me speaking. If we end up having a mid to late February start to tax season because of this, maybe they extend the due date to May 15th again. Hope not, but maybe. Delays in passing the bill, of course, complicate the implementation, and it's tax season. It's important to get this timely passed, and you don't hear anyone discussing that in Congress. So I said the Republicans, the Senate Republicans had some concerns. What are they concerned about? Well, mostly the child tax credit, but not for what you think. You would have thought they would say it's either too expensive or it's ripe with fraud, right? We had all those advance payments during COVID. We also had the issue with the 2021 with the advance payments where you could file somebody separately, and one spouse, the income was low enough, got to keep that overpayment, and then the other spouse could go out and get the credit as well. And you had a lot of legal double dipping. That's not their concern. So they're focusing on a provision or two, right? The Senate Republicans are dissatisfied. This is coming out of a handful of folks. Mike Crapo, I love that guy's name, has been the most vocal person. His issues are the following. His concern is that you can allow parents without income to get the credit. Well, how? You have to have earned $2,500 in the previous year to be eligible this year. So they have publicly said that they think that people will work just enough last year and then quit their job so that they can get the child tax credit for both years. If they believe that today in America, I got a bridge to sell them, but that's what their Republicans have said. All right. You would have also thought they'd be concerned about the ERC, and they are. So one of the things, remember that if I give you a tax break under the Byrd rule, I give you a tax break, I have to come up with a new tax. I have to balance these things. Well, part of how they're going to balance this is all the money they're saving on the ERTC claims they're not going to pay. So Tom Tillis raised this as an issue that he doesn't think that that's the smartest way to fund the child tax credit. Of course, he would rather they didn't have it at all. And again, this is the expanded child tax credit. The concerns about the fraud in the employee retention credit system to begin with. And they have this debate is going on about whether they should balance the funding of one credit with the other. So as they negotiate this thing, it's not so nice, I guess. They think that Ron Wyden is possibly going to have a markup. A markup is where they have a hearing and review the bill in great detail. If he does that, it's going to slow down the entire process. It would also allow for them to make changes from the Senate floor. Biggest issue here would be if you have two different versions of the bill, they're going to have to go into committee and conference to figure out between the House and the Senate and figure out what changes they're going to make. So hopefully that doesn't happen. right? Especially since the party leaders from both sides have basically already agreed to the framework. And now we've got these folks sitting there saying, well, no, wait, there's more. Mike Lindstrom. I hope they don't make a distinction for those in the U.S. and those outside the U.S., like the prior expanded credit. Yeah, I didn't see that, Mike, but it's possible, right? All right. So ERTC, as we all know, part of this bill is that they're looking to curb, eliminate, do what they can to stop the continuing fraud in the ERTC group. There are over 1 million, I think 1,067,000 at last count, amended Forms 941 that have not been processed, the vast majority of which are ERTC. So that's at least 250,000 businesses waiting for their money. We have a couple of folks waiting for money that are rep clients, and you get these phone calls. Well, I want a congressional inquiry. I hear you can do that. I said, really? They're about to vote all these curbs on the program, and you really want your congressman's office digging through your ERTC claim? I don't know. So Criminal Investigation Division is going to be going out doing educational sessions for tax professionals. Just the guy you want to ask questions of and have a misconception with. Excuse me, officer, does 55 mean minimum speed or maximum speed? I don't know that CI are the guys that should be out doing this, but I get it. These are the folks that are doing the prosecutions. So increased compliance activities to help prevent and address ERTC. Let me show you these things that they're looking to do. All right. One, they want business owners to go review their eligibility. I have to tell you, every conversation I've had with someone where I know they're not eligible, they tell me I don't know what I'm talking about. Of course they're eligible. Or a couple of people who didn't, they said, well, I had 10 employees. Why didn't I get $260,000? Because that's not what that means. No, you don't know what you're talking about. That's what Biden wants me to have. So IRS is urging all these businesses that have the credits, don't have the credit, are waiting for the credit, reassess your eligibility. Make sure it's accurate. Make sure you're qualified. You want to understand and adhere to the criteria. I've spoken to more people that are at least partially wrong than anything else. So the IRS is pushing the voluntary disclosure program, and really anybody you think is remotely have a problem, they should be looking at one of the two voluntary disclosure programs. So they're encouraged to apply if they're unsure of the eligibility. There's a special withdrawal program that ends March 22nd where no questions asked, send in a fax, tell them, you know what, I want to redo, send it back. And that's it, they'll drop it. This will let businesses rectify incorrect or fraudulent claims, no penalties, no interest, nobody looks at it, nobody does an audit. Because we've heard, if they come in and do an ERC audit, they're going to look at everything, including reasonable comp. So you want to be careful here. This is going to give people a pathway to withdraw claims without a penalty, and it's aimed to aid employers in correcting the issues. Who are they kidding? It's aimed at bringing people into compliance because they can't audit everyone. Now, what does this do for us? So the government would tell you we play a crucial role in guiding businesses on compliance. Well, the crucial role is that both the AICPA and the Office of Professional Responsibility have said to us that even if you didn't do the ERTC, if the client brings it in to get their tax returns amended and you know they are wrong, you may not amend the return. The only correct answer is you tell the client to return the money to the Treasury. Now, if they refuse to do that and you can't amend the return, there goes your client. This isn't the best thing out there because they're going to find someone to amend those returns. But this is the rules. These are what our regulators have told us we have to do. Oh, yeah. Sabrina wants to know, I'm curious when we will see some statistics on how many people are returning their ERTC proactively. So what I think we want to do is around March 23rd is do a FOIA request and ask them, what statistics do you have? What numbers do you have? They might just be able to tell you that, this many people withdrew or this many 941s were withdrawn. So that would be interesting to ask. Christine says, if I prepared an amended tax return for a client that used a mill or a refund, can I be held liable? Yes, you are not allowed to amend that return if you're an enrolled agent or a CPA. If you suspect that return is fraudulent, that they're not entitled to it, for example, the Dorito defense, their income went up because they did delivery, people were stuck at home, yet they couldn't get Doritos to complete their meal deal. Sorry, that's not a supply chain. That doesn't let them get it. The Dorito defense does not work. And I just made that up too, that I'm calling it the Dorito defense. So yes, you can be held liable. You can have a OPR will not be happy with you. Okay. All sorts of, what are you guys all talking about? Yeah, Susie just says, I disengaged my biggest client because of ERC. I thought it's because they were Eagles fans. All right. It's important to stay informed, though, about what the IRS wants us to do. And we do have that responsibility to assist clients in navigating ERTC claims. So Commissioner Werfel came out, and he was saying that he wants to see an emphasis on accelerating compliance. He thinks everybody means well. He's encouraging businesses to consult their tax professional and join the disclosure programs. Okay. The response to aggressive IRS wants to respond to the aggressive marketing and misleading information about ERC claims. I would hope that they would go after some of the, without mentioning names, there are some very public people who have done ads and sponsored referrals for ERTC claims that may or may not be bogus. Go after a couple of high-profile people. The rest of us will get in line. I don't know. All right, so we said CI is coming out. They're going to host sessions across the country in February. They want to update us with the latest information that's available, and their aim is to assist tax professionals in navigating the complexities. Like I said, I don't know that I would want to ask a CI agent, right, criminal investigation agent, hi, I think I've been doing these wrong. I don't know about that. Although I would ask IRS personnel that have been trained in this. Yeah. All right. So we know the IRS has increased scrutiny. We know that they have not been processing them as they put some systems in place to better screen the amended returns they have. So they've sent out thousands of audit notices and criminal investigation into ERC claims. We're aware of 20,000 letters going out where they denied or partially denied claims. CI has been looking at fraudulent activities. Now, this is a letter that came to someone who is a rep client of ours. And of course, they didn't like my answer. So this was an audit notice where the IRS asked them for $162,000 on their ERC audit without looking at a single piece of paper. You might say, how is that possible that they can audit you? Well, I told the taxpayer this notice was 100% correct at a minimum, and they panicked. How can you say that? Well, what's this paper saying? This paper is saying you filed 42 W-2s with Social Security in 2020. All right, so now we know they're checking to make sure you have employees and that you filed. That's a great screen. And since these people had already received their money, they're going back and looking at the database and saying, for all the people we paid, how many W-2s did they issue? In 2020, the most you could pay somebody is 50% of the first $10,000 of wages. So the theoretical maximum ERTC these people received was $210,000. Okay, here's 210. Here's how much you claimed. 210 is left. Here's 210. Here's how much you claimed. Remember, there's two pieces, the refundable and the non-refundable. So you requested this, you requested this. Then you had 24,000 to carry over here. Okay. So, but you requested 42, you requested 186,000 when you had 24,000 remaining. Therefore, please send back $162,000. As I told the client, it could be more because that assumes all 42 people had $10,000 worth of wages in the latter 3 quarters of 2020. I have no idea. She has no idea. When she said to me, am I sure? I said, this is basic math. And then she says to me, well, thank goodness those 2021 credits are coming in. They haven't sent me those checks yet. Oh, So I told her when she was all bent out of shape, I told her to go back to the preparer. The preparer said he looked at it and, maybe he double dipped a little, to get her a little extra. I said, what? I told her that we should examine me or someone else should examine 2021. And at a minimum, make sure it's got the right numbers. But more importantly, if there are errors or misunderstandings, cancel the request. No, we're counting on that money. Whatever, lady. I'm concerned that we're going to see another letter like that. But anyway, so if you want to see this, I put a redacted copy of this, I think, in our group and in the representation group on Facebook. But if you want to see the work paper, I have a redacted set. It's only like 2 more pages to a letter, and that's it. But happy to share that. Unlike some of our colleagues online, I have this big audit. Can you share a copy of the redacted work papers? No, I can't. Whatever. You want to see this? Let me know. I'll send it to you. All right. This was disturbing. So once you start talking about ERTC and things in social media enough, you get invited to other things. I was so happy to read that I might be eligible for $32,000 because I could sure use that, especially in December. And this organization is called, where did it go? They call this the SETC, the Self-Employed Tax Credit. I had no idea what that was, so I went and got myself educated. So the self-employed tax credit is available to you if you are a self-employed individual, a proprietor, a single-member LLC, or a 1099 subcontractor. Wow. Yeah. Do you satisfy the basic requirements, right? Are you greedy and do you want money? To be self-employed in 2020 or 2021, sole proprietor, 1099, single member LLC, and you submitted a Schedule C or a 1065. Okay, so far, maybe that's me. The self-employed tax credit. Now, in 30 years of being here, I never heard of that. Serves as a valid lifeline for individuals who have been directly or indirectly impacted by the far-reaching effects of COVID-19. So far-reaching, it's 4 years later, and it's still reaching into the government's pocket. So basically, they're talking about the credit for lost time if you had COVID and you were unable to work. There were employee credits, there were employer credits. We hardly took these for people, right? But here are the key points. Again, how to be self-employed, 2020 and 2021. You're not eligible if you're a sub-S corp or a true S corp. I don't know what the difference is. I think they misunderstand about a whatchamacallit. They misunderstand that a sub S means S because they might be thinking about a Q sub. But either way, that you are not eligible for the SETC. Have any of you claimed this yet? Can't wait to see Mr. Wonderful do a commercial for it. All right, so the IRS's compliance, by the way, those things are off a website and off an ad. I have not seen anything in the IRS literature on that company or those credits or what they're doing, just sharing it. So the next steps out there, though, in the IRS's employee retention credit compliance strategy, they're implementing all of these fraud protection measures as they resume claim processing, right? So, I mean, they're finally doing the basic stuff. Could you have possibly earned this much of a credit? Right? There's still not a date yet where they're going to be starting processing. They're enhancing compliance reviews for the claims that were submitted before the moratorium, because I guess people learned their lesson when the government said, don't submit fraud. There are special initiatives out there to assist businesses into making that were misled, right? So among other things, you only have to pay back 80%. Yes, Catherine is right. Form 7202. Correct. And there's a famous TikTok personality who said something when that form first came out to the effect of, if I'm reading this right, everybody who had COVID should get $64,000. And that thing was up there for a couple of days. All right. The IRS is looking to redesign their notices. While I think that's a great thing, I think they could put resources into answering the phone first. So they have something called the Simple Notice Initiative, and they want to redesign some of the 170 million letters that go out to people. This is part of their larger transformation and using the money under the Inflation Reduction Act. The focus is on simplifying the most common notices, like pay your bill. You didn't file. All right. They want to make the notices clearer, more concise, reduce taxpayer confusion. Remember when those notices were all in capital letters, right? They've gotten better. This is becoming Werfel's, Commissioner Werfel's signature here is that he wants to see this easy, more electronic and easier to use. And they're hoping that clearer letters mean less phone calls to the IRS so they'll be able to answer the phone. For this year, for right now, they have 31 new notices that will impact about 20 million people. Or 20 million notices that were sent out. Sorry, that may or may not be 20 million people. So if you have the combat zone deferment, unfiled return reminders, balance due notifications, the CP14, they're all redesigned. For next year, filing season 25, they want to continue to focus on common notices. They want to review and redesign up to 200 notices, which would represent 90% of the notice volume that goes out to individual taxpayers. Income adjustments, return corrections, tax owed. They're hoping to engage with us and with taxpayers for feedback on their redesign. The one thing I think they do that's smart is they've got the QR code on there, scan the code, and it'll jump right to the information. Probably a good idea. For tax season 2026 and later years, they want to look at business notices. I think you start to get that far out. It starts to be a little more difficult. Now, here was their pilot. All right, this is improving the taxpayer experience. Now, remember, we have a taxpayer experience office. We have the Taxpayer First Act, which created the Taxpayer Experience Office. So in theory, the IRS has brought in people that have the skills for a company interacting with its customers. And that's the relationship that they're trying to view, that these folks are customers. So the pilot was to redesign the 5071C letter. The 5071C letter is, I'll show you in a minute, is the, you might have a taxpayer identification. You might have a identity theft issue. You need to call us and identify yourself. So they redesigned it, and they thought that they got good feedback here. So they shortened it from 7 pages to 2 pages. That alone, they should get a medal. They had clearer instructions, and they put visual enhancements in there. The pilot resulted in a 16% reduction in taxpayer calls and a 6% increase to online responses. I think that's a great result. So this is what the webpage says, right? What is the 5071C letter? Don't file the ID theft affidavit. We need to hear from you. We can't process your return until we hear from you because somebody else already filed with that Social Security number. We need to hear from you. Bill says, I am working with an elderly retired couple who showed me their letters showing they were currently not collectible. They did not know what that meant. $80,000 falls off this summer. Wow, that is great, Bill, that they're letting people know. But yeah, they should give them a lot more explanation. But they're getting there, right? One piece at a time. All right. So enough ERTC, enough IRS notices. We're hitting the home stretch here. So Connecticut, if you're in the New London, Connecticut area, there were storms. So Mohegan Tribal Nation and Mashantucket Pequot Tribal Nations, which is where the casinos are, they have additional time to file returns until June 17th. Extensions and everything, IRA deductions, IRA contributions are all put into effect here. So if you have folks in Connecticut, just see what their due date is. All right, the IRS has a reminder out this week on digital asset reporting. Maybe something they're doing well here. So, of course, we've had that digital asset question since 2019, 2020. So what they're asking for is consistent with what they asked for in 2022. They're emphasizing that you have to answer, and they're also reminding you we have now expanded it. We're asking that question on Form 1040, 1040SR, 1040NR for non-residents. We changed the wording a little bit, and now we've added the question to the 1041, 1065, 1120, and 1120S series forms. About all that's left is adding it to the 990. Hi, did your nonprofit trade any crypto this year? Stranger things have happened. All right, so the question about receiving or disposing of digital assets. Here's where we are. It asks about rewards, awards, payments, sales, exchanges, dispositions. It doesn't ask about gifts. Tailored variations of the question is out there for corporate partnership and estate and trust taxpayers. But I'm going to show you, it really isn't that tailored. Taxpayers are responsible for reporting the information accurately. Now, what I think is interesting, I haven't tested this yet. You know how sometimes you see a return someone else did, not that you did, but like Schedule B of 1065, they didn't answer the questions and somehow it got e-filed? That's where these questions appear. So I'm wondering if they're going to accept an e-filed return with the boxes unchecked or if they're going to mail it back to you. Be interesting to know. Of course, we're going to make sure our clients do it correctly. So here is the 1040 question this year, right? Call it digital assets. At any time, did you receive that list of things, sell, exchange, or otherwise dispose of it, right? Now, on the 1065, which is here, at any time during the tax year, they call it tax year, not 2023, because it could be a fiscal year. Did the partnership receive as a reward, award, or payment for property or services, or sell, exchange, or otherwise dispose of a digital asset or a financial interest in a digital asset? Identical wording with the exception of the fiscal year and the partnership. So the 1120S, and any time during the year, did the corporation, blah, blah, blah. Again, same. Two other places on the way out. At any time during the year, did the corporation, this is our C Corp, receive it or dispose of it? And then finally, at any time during the year, did the estate or trust? Same thing. Very interesting changes. I'm not going to go over this with you. I wanted to put this out here. The IRS does have a heart occasionally. Apparently, there was a problem with Maryland prepaid college trust distributions where the darned thing, you couldn't get your money out even if you asked for it. So there are some problems with rollovers and other things. They've modified the limitation. So by the time they got this thing fixed, it's possible that there were folks that inadvertently had interest added to the account and need to get that money out. They're giving you relief to move the money out without penalty, right? There's a specified amount of time and you can still do it. You have to get it done before January 1, 2025. So if you need to read that, it's pretty informative. Again, now this was interesting, and then I'm going to let you go today. So we've been talking about things that are indexed, things that should have on the $25,000 pyramid, things that are indexed, things that should be indexed. All right. So one thing that isn't indexed, because the $600 non-employee compensation amount is not indexed, right? That's in the 1954 code, 54. Yeah. So when we started taxing Social Security in 1983, guess what? That 25 and 32,000, that's the number. I started doing returns January of 1987. Those were the numbers. So what if the consumer price index had been applied to this? Now, keep in mind the way the IRS does it, they do it with rounding. They only move it when you get to the next 100 or 500 or whatever the law says. So this isn't perfect. But if you apply the CPI numbers to this, right, from December of 83 to December of 22, you would have the single number would be $73,000 and the married number would be $93,000, right? So in other words, all of your income plus half your Social Security would need to exceed those thresholds before it was taxable. So that's really interesting how that could work if anyone ever asked us to index this. I hope you've had a fabulous day. I hope you have a great weekend. If you're in an area where it's going to snow, stay safe. If you're where it's raining, stay safe. And until next week, everybody, Monday's the start. Have a great tax season.